Okay, so I'd like to take this opportunity to kind of go over some TA with you, and as we do, you can ask me questions, that you may have as we take a look at this. But I'm going to go through just kind of some basics for you and how to use them for TA. So let me share my screen here with you, and can you see that there?
Yeah.
Beautiful. So, we kind of covered this a little while ago, but, utilizing technical analysis kind of gives you the ability to not take the guesswork out of what's going to happen. Clearly, it's a method of speculating, but it allows you to kind of, determine where price will go, or how to set up a trade in a way that is less just wholly speculative and more like kind of pinpointing this, utilizing historical price, right? Which, if you're looking at efficient market hypothesis, all forms of efficient market hypothesis kind of reject this, saying that historical price has no ability to predict future price because it's already built into the price of what you're seeing in an asset. And so the past performance of something has no effect on its future because it's already built into where the price is currently at, right? And so pretty much every form rejects technical analysis as an ability to determine where things are. I don't agree with that necessarily, because I think there's markets being cyclical, and in some clearly, in human nature, history repeats itself, right? We hear that. I think there's some predictability, and even if there's not, there's a way to manage your risk in a way that allows you to kind of put a number on where things are going to go and your bias and how to trade, right? So one of the most basic ways is by utilizing areas of support and resistance, not even considering trends at this point. And on the chart currently, we have drawn a area of support, right? And support.
What is support?
Well, support is an area that you have on a chart. Well, it's a floor, right? Like, I like to think support and resistance is floor and a ceiling, right? So if you're considering a range, right, like this we have here, support is the floor. It's what holds price up in the way that a floor holds people up, right? And resistance would be like a ceiling, and or where it suppresses price action in the same way that it would keep you from going through into your neighbor if you live in an apartment above you. But in the same way that a ceiling is a floor for the person above you, support and resistance act in a similar way, that once you've broken through a level of resistance, it now becomes a area of support, and vice versa. Once you've broken through a level of support, it has now become an area of resistance, in the same way that if you were to fall through your floor into your neighbor's apartment, now you got to get back up there, right? And so it's kind of like a really basic way to kind of think of it. And when you're looking at a chart, generally speaking, I think they're kind of obvious, right? Areas of support or regions where you see price testing and then staying above, right? Comes down here and tests it here, moves back up. Tests it here, moves back up. How you want to draw these on a chart depends on your time frame. It depends on I guess your eye and what you're seeing. Maybe you'll nail it, maybe not. But generally speaking, you want to have 2, 3 or more points of contact on an area of support or resistance, right? In order to identify it as being meaningful, right? And so when we're like lining up, say this area of resistance up here, okay, currently is an area of resistance, right? You can do wick to wick, right, where the tips of our wicks, and so a wick on a candle, right, just to kind of cover this real quick, is like the long, leg up or leg down on a candle. These are each candles. And then a body is the centerpiece, right? The big fat middle. Okay. Red candle, is one that the price opens higher than it closes, or closes lower, than it opens. So it opens up here, moved all the way down here, came back up and closed here. So that's why it's a red candle.
Why are some of the parts thick and some of them are thin?
So the body of the candle is your open and your close. Okay. And again, and I'm actually just going to change this to the arrow. So, on the, say for, a candle like this, right? It opened on the, well, that's harder to kind of illustrate, I guess. We'll just use this big fat candle here, right? So this, on this time frame, so we're on a daily chart.
So each one of those bars is a full day.
Is a full day
action.
Correct.
Okay.
And so the bottom of this candle is where the price opened for the day. Okay. And at some point in time during that day, it fell lower, right? And it reached a bottom down here. And then it moved all the way up to the tippy top of this wick up here. And then it closed the day at the top of the body of the candle.
Oh, okay. So the bottom is where it opened and the top is where it closed, but it went in those ranges.
Correct.
In the meantime,
that's your high and low. And so that's what you see up here: open, high, low, close, right? Is your open, high, low, and then your close. Okay. Now for a red candle, it's the opposite, right? For a red candle, it opened here. It went up at some point in time to here, came down here, and then it closed lower than it opened. So that's why it's a bearish candle, is what you.
So that's why candles. Okay, that makes sense.
Yeah. So that's why they look the way they do. Right. And then you have like these really long wicks down. Okay. So during the trading of this day, right. And we can actually do this on TradingView, where we can zoom back here to like right here. Okay. And then let's take a look at like a 1 day. Right. And so I don't know if I'm looking at just that 1 day. So beginning this day, this is the 20, this whole thing that we're seeing now roughly is, there's May 19th. Hold on, let me go back to the day to make sure what day I was looking at here. This is the 19th. So starting right here, okay? So this is the beginning of the day on the 19th. This is the end of the day on the 19th. Okay. So the beginning of the day we opened, and we can write this or show this right here. Okay. Is where the opening price was on the 19th. And then we went all the way down, and it looks like the opening was roughly like the high of the day right around here. Okay, because we don't seem to go above that, right? So what we're looking at is a 1 minute chart, and all of this price right in here, right, is what we would see on that 1 day candle. But each one of these currently is a 1 minute candle. Okay, so this can be, kind of infinitely broke down, assuming your software will go down to, whatever, 15 seconds, 5 seconds, 1 second, right? But currently each one of these candles is now 1 minute, and we're looking at a single day. So within the single day, we kind of opened right here. Doesn't look like we ever really came above that, but we did go all the way down to this down here. Oh, missed it. Right down here. That's the bottom. Okay. And we can actually change the color of this to say red, right? Oh. And then we close the day. Okay, over here, this is the daily close, right? Well, ish. I don't know. It's not showing. It's showing 20. So I don't think maybe I went back too far. Let me play this out a little bit until it gets to. Now we're in 21. sorry, I want to see where the day closes. This is a replay on TradingView. It's actually playing out, what we
What happened?
yeah, what happened historically. So I basically just rewound it, right? Okay, I think we're into the 20th now. So so we're into the 20th. So the daily close was like right around here. Okay, so right kind of here. And that's where we closed. And we can make this, I don't know, white. Okay, so now what we're seeing, and I'll actually label this with a vertical thing there too. Okay, keep grabbing onto that. So right there. So this is the end of the day. Make this purple. Okay, so what we've seen here, and I'll make this purple as well, so we can see so from this pillar and this vertical line here to this vertical line here was 1 day. Okay, this green line is where we opened the day. The price action moved all the way down to this red line and then moved up at some point back up here, fluctuated in this region, and then closed right here at this white line. Okay, so now when we take this back to our daily chart, you can see all that we've done really is marked the levels on that candle. And maybe I actually went I didn't go far enough back when I was on that 1 minute chart there,
but it makes sense. Yeah,
but what we've done is we've got the 19th. This was actually the open. Okay, so let's go back to the 1 minute chart. Okay, so this was the open on the 18th. Interesting. It's actually conflicting because it's down here at midnight was the open right here. Not really sure why it shows that. But yeah, on the daily.
Yeah, but I get your point.
What we're showing is that, we started, and I can hide all this now. We started up here, that moved down here to that white line, right? Or the red line down here. And then it moved back up and it closed right around here. And again, I'm not so sure why that doesn't jive, but there might
Shouldn't
be,
the white line up with the bottom of the green though?
Yes, it should. And okay. I don't know if it's because I'm doing this replay and it was showing me something else, but
well, it makes sense though.
We could do it with this most current candle for sure, right? We're showing a single day now. Should be. Oh, you know why? That's why. Okay, I'm screwing it up because I'm in a different time zone. I'm in New York, okay. So the open and close isn't actually the open and close for a day.
Okay. Well, that makes sense. I mean, I think you got the point across though.
Yeah. So in any case, this during the day, it opened here, it moved all the way down here, it came up, you saw it fluctuate in this, and then it closed the day down here. So that's what the candle is showing. Okay. So then when we put, and I'm going to kind of get rid of those that I just did. We're looking for areas of support and resistance. Historically, we're looking for areas where we've tested a certain region over and over and over again, right? And you want at least 2, but generally more points of contact. And what when I'm drawing this lower one here, what I can do is we see this right here, kind of almost touched it, kind of right on the money here, dip below it, right on the money there. And then actually our previous, it just barely almost didn't touch it.
So the more areas of support you have, the better the price should hold up.
Correct. The more times that price has touched an area of support, the stronger the support has become or is, right? And a lot of the times
there are more people that have accumulated in that kind of range or started their position. So like when people start to go under the position, that they start to get weary and sell off.
Right. So what you're finding is buyer support in these areas, right? So that's where buyers are coming in. They're not letting it get any lower than a certain area. So in this case, we're looking, pretty much right at 30. 30,000, right? I mean, is what you could look at as a psychological support, nice round number. People say, just throw my buys in at 30,000, whatever. And so when we get these breaks, like these wicks down, is what this is called, like wicking down, right? Where price on this day really blasted low. Okay, what you're seeing there is very likely the is margins, or leverage trading. People getting just liquidated, right? So prices getting pushed lower, lower, lower.
They have their
Accounts
stop losses in.
Well, stop losses, yes, but liquidations, where the amount of money that people have in their account
Can't cover their
borrow. Right. So they're getting forced closed. So this is a topic that we could even, speak about more later, but the ability for the exchanges to push these things down if they really, wanted to, or any, people to really just cause these mass liquidations across the board is there, certainly, because as soon as X amount of people are getting liquidated here, they're selling their positions, right, which causes the price to get pushed lower, which may liquidate another group of people, right, causing the price to get lower. And then people who are getting liquidated may put more money in and buy, but then it gets pushed lower, causing more liquidation. And it just kind of just continues on until we find some area where like no more people are getting liquidated, or no more people's stop losses are getting sold, and we see more buyers.
It's crazy because if you hit that 30,000 level, you would have got, it would have went even lower, but it just didn't get there.
Well, it's very likely that all these, anybody trading on leverage at that point had already been just completely has been liquidated all over the place, and that a vast majority of people had put their buys here. So now you're seeing a lot of buy, a lot of buyers come into the market saying, oh, this is a discount, this is where I want to see it, and then pushing it back up.
Such a weird number to fall to. What was it?
28 something or other, or no, 30. No, I'm seeing 3066 on this candle here.
Right,
you can
right
see it up here.
30.
Yeah, 3066, right. And so, which makes sense, right? Put your buy orders just above that. Maybe one person, I don't know, but you can see that this is an area of support, right? Is what we're looking at, roughly in this range. Some people are really like kind of fixated on just nailing the exact number.
Right.
For me, it's like there's a range, right? It's clearly in this range that there is some support, right? And I'm actually going to go back to the cross here. So the same applies true for your resistance, right? You want to get as many as you possibly can in here. And, I'm just doing a range kind of like right in here, right? Clearly this is an area where we were tested, rejected, tested, rejected, tested, rejected, came down. And then we finally blast through it and then moved up. Came back down, didn't really retest it again, but as it came down, it tested this range, and then completely rejected here, came back up, kind of retested it, rejected, retested it, rejected, right? So this is why you see in the news, Bitcoin fails to overtake 40,000, right? This is a key level that we're looking at, clearly because it's been an area of resistance historically, right? And it continues to be. It was an area where when it broke through, we got a big sell-off. Okay, and so we do need to overtake this area. But now we're working in this range, right? The price is in the same way it was over here. It was kind of working in this range. Same thing, and we could draw other little areas of support and resistance within this, right? Like right here seems to be an area of support, which is roughly where we're sitting at now. We could even get it right in here. And we're seeing some support there.
What's crazy is it was sitting, I think last bull run, it topped out at around 20,000.
Yep.
And this time it came right up to 20, it looks like, and barely anybody sold off. It's almost like once you get back to that all-time high, you get that little confidence boost. People get that confidence boost saying like, all right, it's got to go through this because it's been here before.
Yeah. Are you talking about right over here?
Yeah, I guess that would be the area.
Yeah, so you had this like ascending triangle. This is right before we finally broke out of our all-time high, and really made some moves up there. You get this kind of ascending triangle here, right? Where it doesn't make lower lows, it's pushing up against this, it's pushing up against this, it's pushing up against this, and it wants to move above it. And when it does, you have a few things. You have everybody who's shorting it and considering, like it's not going to do it, it's going to dump again. All the bears. Totally getting squeezed out of their positions right here, and kind of the opposite of the liquidation on the low end, right? Like everybody's got their stops just above the 20,000 or whatever it was, the all-time high, and once it blasts past that, comes back down, your buyers are saying no, we're good, this is our pullback, and then just never look back, right? Until
it never,
we hit this 30.
If you bought at like 20,000, like on the breakout of 20,000 and just went long, like even on leverage or margin, you would really wouldn't even have been liquidated.
No, not at all.
So it's almost like if it does that again over 65, we might have the same kind of, not to say we will, but
sure, and it could, right? But this is where, again, these levels of support and resistance, this was a clear level of resistance, right? Like this 20,000. Now it came from back here, right? Excuse me, over here. Now, all this is done on a logarithmic chart. It's just so that it'll display the information in a way I think is.
What's logarithmic versus what?
Logarithmic versus arithmetic or linear chart. And so this is a logarithmic chart, right? So it's displaying the information in a way that shows, the move down of a certain percentage looks the same here to, here and here, right? The percentage loss versus how your x-axis is displayed over here, right? To where zero, you can see zero, wherever that is down. Yeah, I guess you can't really, it doesn't ever hit zero, but I can't squeeze the chart in anymore. But where your percentage, right? Like if you were to take a 10% move down or whatever this was here. Oh, where's my, oh, there it is. So that was like a 50% move down. And this is roughly a 50% move down, right? It looks the same. Whereas on a linear chart, right, because the prices move so much higher and it's displayed linearly with zero and just counting up, this 50% move down, right, does not look the same as this 50% move down.
Oh wow, okay,
right. And so it's just how that is.
So it's better to do it in logarithmic.
Yeah, and then over here you may have another 50% move down here, right? But it looks just negligible, like it doesn't even look like anything. So displaying it, there's pros and cons. Kind of on a longer time frame, I tend to stay in log just to kind of how it's displayed, right? Visually display it better. So that said, we had this area of support here from our all-time high. Obviously, we were going to have some resistance, but when we hit it, that pullback, the trend stayed, right? Stayed going up, and that's what we're having here with this ascending triangle. Is that it's pulled back, hit it, rejected, came back down, did not make a lower low, came back up, pushed it. You could even take it a little bit lower, right? Because we hit like multiple times on the daily, right here, bumped up against it, kind of tried to break it here, didn't really happen, bumped up, and finally volume comes in, and then it just blasts off, right? Whether this was like the Elon pump or whatever you're considering it, this is when buyers overtook the sellers and the hype continued. I think the Elon pump was actually over here, but in any case, that's kind of what's happening. So fundamentally why that happened, or whether it was going to happen, or looking at adoption and all these different reasons, you can drive yourself nuts determining without looking at the charts, right, whether or not it's going to continue or it's not. Technically, as a trader, if you're considering where to put your buys, right? Like, should I buy this region? What is my risk associated with this on my portfolio, right? You can just use this tool to kind of graphically represent it. But if you were to say, okay, even like over here, right? And you say, all this does is it calculates your it's a risk reward, right? Your profit versus your loss, okay, on the trade. And so if you say, all right, well, this is the previous low. If it makes lower lows and continues to go down, we know that this is a serious area of resistance, right? Right in here, because it was its previous high. If it continues to go low, likely to keep going lower. So I want to associate my risk with this, right? Like I want to say, or I want to understand what I'm risking if I do go long on this. Now, if you're just long, you don't care whether it goes up or down long term over the course of 5-10 years, you think it's going to go up, whatever. But if you're trading and you want to kind of really, understand the potential loss that you have on this, then you can do, say, all right, well, I've got about 18% loss, and then you can structure your trade and your buys accordingly to where you can say, of my X, however much portfolio, I want to risk maybe 1% on a long trade, or however much money I have, I want to only risk maybe 1-2% long if this is rejected. And then, identify that. The other way to look at this is to say, I want confirmation that we have broken out of this. I don't want to lose anything on a pullback or on a stop loss. And so I want to see that we've actually broken out of this before I enter into a trade, right? And it did. Okay, and now say, okay, well, we're fairly confident that it's likely to continue. Now we can look at potential.
When do you enter that trade, on what time frame? Like, because I know a lot of times it'll break, like, say 20, and then it'll go up a little bit to like 2,500, and then so let's say you enter it, say you enter at 20 because, or 20,001 because it broke 20. It goes up to that whatever 20,100, and then it comes right back down. When do you enter that trade? Like, what's the confirmation for you to be like, all right, we broke out, this is safe now?
Sure. So depending on the time frame that you're using, you want to generally at least know kind of a macro view on what we're looking at. If this is a 1 minute chart, you would trade it differently than you would like this daily chart. But you certainly want to see candle close, right? So like this candle move up here, right?
On what time frame?
This is a daily time frame.
No, I'm saying, like, when you enter the trade, what time frame are you looking at on the close?
Well, it depends on the time frame.
If you're watching it live, you're not going to want to wait a day for the candle to close. You're going to want to wait 5, 10, 15, whatever.
Well, you should wait for the day. You should wait for the day. Okay. Yeah. Well, I mean, it depends on the trade. It depends on what your plan is, right? If you're looking to scalp something, and you're not looking to go, super long, right? You need to understand your time frame, that your view of the trade that you want to take, right? If you're just looking for entries to go long, right? You want to see 5-10 years down the road, you're looking for good buying opportunities. And that if it breaks this 20, it may never come back down here, right? Like your risk there, you say, okay, well, I'm just going to throw it in there, kind of see what happens. When you get confirmation with this daily candle close here, when it breaks up and closes, right? Then it's like, okay, well, now you can add it there. And maybe if you really, wanted to put a stop loss here, because if it gets rejected on the next day and comes back down, it may just continue to go down. It really depends on how you want to structure the trade itself, or what your trade plan is, right? It could really change across the board. But if you're looking for confirmation, whatever time frame that you're looking at the chart, you generally, it's a good idea to wait for the candle to close, right?
On the daily,
on whatever time frame you're looking at, right? So if I'm on a 4-hour chart and I'm trading kind of this area, you know what I mean? If I was, let's see if I can find it. If I was trading this candle right here, right, on this 4-hour candle, right, and I'm saying like, okay, I'm looking at a 4-hour chart. This is the time that I'm choosing to do my analysis. And I see, let's assume that we're back in time here, and I see this candle. At one point during this 4-hour time frame, this candle was moving up, right? And you can see that, right here, the candle is moving up. And at some point, this candle was green all the way up to here during this 4-hour time frame. Okay. Now, if I said it's broken out, it broke out of this where it had tested here. So some area of resistance, it broke out, it moved up, it's full green, the whole candle was nice and fat green all the way up here. That's my confirmation buy. Well, turns out over the next few hours or whatever time frame until this candle closed, it moved back down, and it just remade this area of resistance, right? And then as time moves on, we see that it never really broke that, right? And so it has not.
And you want to look at the overall trend too.
Yeah, absolutely. Yeah, absolutely. So had you not waited to put in your buy order, assuming that this was confirmation of a break of this area of resistance, until the candle had closed, if you just went ahead and threw it in there and then it just moved down, well, now you're looking at your loss being, substantially more than if you had waited for confirmation with that candle close. And again, this is on whatever time frame you're choosing to buy. So waiting for that candle close, I think, is one of the main things you need to look at, because again, as we can see, like this guy here, right? Like this candle over here would have been duped out a lot of people, right? Like if at some point it had moved during the day all the way up here, if you're saying finally we've broken out of this area of resistance, and then there's a massive sell-off, you potentially, if you had gotten spooked, lost 10%, within a single day, thinking that we had seen a breakout and some sort of confirmation when there was no confirmation on the daily, right? So the time frame in which you are trading and you're planning your trade needs to be observed across the board, or at least waiting for confirmation of a close. And that's just one way to look at this, right? Not a lot of people, not everybody trades candles, right? There's other, you just look at the line chart, maybe you're looking at a bar chart and considering these other ways. But so, this would have been a solid indication that we were going to continue to move up with this close here. Nice fat, green candle, nice long body. So to enter along in this, here with some confidence, we were going to continue to move up, which we did for some period of time, would have been kind of a good indication that, we were going to continue to move up. In the same way that this big red candle here was an indication that we continue to move down, which we have so far, right? But again, we're looking at our levels of support and resistance as being, our ceiling and our floor. And, as we break through the ceiling, just imagine, you're Mario or Luigi, and you just smash through here. Now you want to bounce on this. That's a good, indication. If price moves up, breaks above this, comes and retests it, and then bounces or makes a higher low, that's confirmation that we found this level and it's now support on closes, like multiple candle closes. Maybe it wicks down below here, but comes back up and closes above this.
Closes there.
Right. So it's important that you observe the close and when you're trading, for sure.
Pretty cool stuff. It was very informative.
Yeah. So we can get more into these, as we talk more about this. And, if anybody's interested, I'm happy to do one-on-ones with them. MoneyWarInvesting.com. Sign up. That's one of the things that, I think makes us unique, is that willing to put like really, white glove focus on understanding people's, I guess, level of understanding. There's plenty of free material out there. And if somebody wants to teach themselves, YouTube is a great resource. There's all sorts of places that you can go to learn technical analysis. But, certainly what we offer is the ability to do one-on-one with people and really, I think find, ways to help help single people and individuals understand this versus just, rewatching a video 100 times over and never really, pulling any
Yeah,
other
but
meaning out of it.
the ability to ask questions that, everybody has different questions. So
Yeah. So that's that, support and resistances.
cool. Thanks for that.
Yeah.